In this video, I'm going to be giving you two necessary rules that you can use to validate any order blocks that you're looking at now or in the future. And then I'll also give you a possible trade that you can take in the future if you're watching this video early enough on. So as always, watch to the end for that and leave a like, subscribe, join the Discord, all helps out the channel. Let's get into it. So first, I'll just explain a bit what an order block is if you're not sure. If you want a more in-depth guide, check out YouTube, there's going to be loads of videos on it. But basically what it is it's the last push in one direction before the move in the opposite direction. So you see push up for strong push down. Your order block is going to be somewhere in this push up. It could be the whole push up. And then for buys, your order block is going to be the last push down before the big push up. It could be one candle, it could be a couple of candles. Over time you'll learn to be able to see which is most likely. This is the basic idea of what an order block is. And so a few examples of this on this chart would be, I scroll back, you can see an order block here, the last push up before a big push down. See here, last push down before push up. Again here. There's going to be more that I'm missing out, but just some that are speaking out to me and they're obvious. One here, and then the three that I'm going to be looking at in this video are this one here, and this one here. So these kind of order blocks, hopefully that gives you a better idea if you weren't already familiar with the term, but just the last push in one direction before a move in the other direction. So then getting on to the rules, the first rule is that the order block must cause a break of structure. And so I'll just mark up these three order blocks that I said I would talk about. First one here, see we get a reaction but not strong enough. Second order block up here, and then the third order block over here, which hasn't been tapped into yet. And I'll talk about that later. But the first rule being that the order block must cause a break of structure. If you look at this first example here, you could call this structure, but I wouldn't. It's not, one candle pullback isn't really structure for me. You want something strong like this to mark up as your structure point. You could class this as some structure to be broken, but this would be better. If the structure gets broken, that'd be better. But if there's a structure break here, then this order block could be valid. My reasoning for that is that after this big push up, you do get a pullback and then some candles that's still in this area. If you went to a lower time frame especially, you'd be able to see it clearer. But there's definitely a pullback here for another leg up. Whereas here, it's just a one candle pullback and it's not really a proper structure point. And so following this rule, you wouldn't have taken a trade from this order block and you wouldn't have got stopped out. Then looking at this second order block that I've marked up, you can see structure is broken here and structure is broken here. So it follows the first rule and it's valid so far before we get into the second rule. As you can see, these are both clear structure points. Push up, pull back, clear structure here, push up, pull back, clear structure here for another push up. And actually something else I would just mark up is a fourth order block that we could have been looking at. I'll get into why we wouldn't look at this later, but as you can see, it did break structure, both in two places, both here and up here. The main structure. This is the main structure that we would have been looking at, but this is some minor structure that was also broken. And then as for the third order block, you can see structure here being broken. This structure hasn't been broken yet, but we can expect it to be taken at some point if we continue bearish. But it broke one structure, and that's the main thing. This was some key structure. Nice pullback for push up and then broke structure. The second rule then is that the order block must be followed by an increase in volume, which shows that there was a lot of orders placed in this area. And effectively you're looking for imbalance because there is an imbalance in price. There was a lot more sells here than there were buys. Same case here, there was a lot more sells than there were buys. And then in this case, there was a lot more buys than there were sells. And so you're going to be looking for these big candles after the order block that you were looking at. As you can see, there's a big candle there, big candle, big candle. It's always a big candle if it's a valid order block. And two ways to look at this. You're going to be looking for an engulfing candle as a minimum after the order block. And ideally, there will also be some imbalance. So you can see there's imbalance here and imbalance in all of these order blocks I've marked up. So these are the two fundamental rules that you're going to want to follow when trading order blocks. There are more that you can use to increase your win rate and increase your probability of the order blocks playing out, which I can go through a couple now. And the first one being look at the high time frame and look at your overall picture. And just talking about this demand zone here, the bullish order block, the reason that it probably didn't play out was because, as you can see, we tapped into this order block that I marked up, which is a daily supply zone. And so once it tapped into the supply zone, it'd be likely that we would get a change of character and start going bearish. And so still looking for longs is a risky play. It could have played out, but there's just a lower chance of it playing out. And so I try to avoid those trades. So trading line with your higher time frame trend and higher time frame picture. And then another rule, if you wanted extra rules, would be if you've got this order block here as well, follows the first two rules, had a breaker structure there and some imbalance, but there's another supply zone order block above it, and so you're going to be looking for extreme. So you can use the fib tool for that, or you can just look and go for the most extreme, or wait for confirmation in this zone. But if you want to keep things simple to start with, follow these two rules: must cause a breaker structure and must be followed by an increase in volume. And now, how can you use these rules to enter trades? Well, I will show you one trade that I'm currently in and one trade that you could look to get in on in the future. So the first trade that I took was simply just a pullback retracement to this supply zone. I had my limits here, and this is where I got in. Stop loss above there, and I'm targeting somewhere down here. I think probably this supply zone, demand zone, sorry. So this is my first entry, 1 to 6, and the reason for this was that we tapped into this daily supply zone. If we go to the daily, you can see there's a nice supply zone here, and then going back to the 4 hour, we got a change of character and a supply zone was left behind. So I entered aggressive from there, and price has moved down, pulling back, but if everything goes right, then it should continue down. And so you can get a re-entry here from this new supply zone. You can put your entry on there. Stop loss, this trade is a bit more risky. You can either place your stop loss there if you want to be aggressive, or you can place it above this liquidity grab and then target. Remember, you can target the same place if you want for 1 to 4.7. But this is a possible trade to get in on in the future. And the reason I like this trade is because if you delete these, you can see somewhat of a Wyckoff distribution pattern here. You've got push up, push down, liquidity grab off these highs, and then your last point of supply is this order block. And there's also some nice equal highs that have been formed now. Nice liquidity above here, just below your zone. So this is a very nice trade to get into. And so if you see this video early enough, it might be out after this is already tapped in, but if it has, you can always look for re-entries to go short on CAD CHF. Hopefully you've learned something from these rules. Easy to follow in my opinion. And if you have any questions, let me know in the comments or in the Discord group. But as always, thank you for watching. Leave a like, subscribe, and I'll see you in the next video.